It's going to be quite an interesting week, there's no doubt about it. I guess at the end of the day, you've got to really ask yourself whether or not the stimulus is actually working. We did get a round of pretty negative data that came out on Friday night. I'm certainly questioning whether or not we will in fact get it, and if we do get, it'll only be a small amount. So I guess in a nutshell, you look at it and you've got to think whether the economy is actually improving. Well, it's not, and I think that's the key. How will it affect on the commodities? I think this is quite an interesting point, because if we feel that we get no tapering, or if we get a little bit of tapering, it'll suggest that the stimulus will be here for some time. As a result of that, I think people are starting to put the stimulus trades back on. So what does that mean? That means the US dollar goes lower, commodities go higher, and the equities go higher. We've already seen a bout of that this morning when the dollar index broke through 81.30. As a result of that, we saw gold up, silver up, and also seen equities trade quite higher. So it's going to be an interesting couple of days, there's no doubt about it. But for my money, I don't think we'll get a lot of tapering. In fact, I don't think we'll get a lot at all. Well, I think this is quite interesting when you look at the price of gold, because fundamentally it's still quite solid and it feels as if it still represents a buy at these levels. Technically, as you suggested, we've dropped $100. So I think a lot of people are questioning whether or not that trade is still on, the long gold trade is still on. In my mind, once again, it's got a lot to do with fundamentally what's happening, I guess, in the emerging markets, where we do see some issues there. Also, a lot more demand out of Asia, particularly China and India. So I guess from here, I actually feel it's a bit of a low. I am certainly keeping an eye on that dollar. That dollar does look like it might start to break down from here. As a result of that, that'll support gold. So for my money at the moment, I think this is an excellent opportunity to get long gold. If we do get a break below 12.70, I'm going to be certainly be stopped out of my position. But from here, I do think it starts to trade back to the top end of the range. Well, I think when I look at Syria, I think the deal which is going on between Kerry and Lavrov, I think, represents an out for all players, and I think that to me is one of the good things about what's occurring in the geopolitical area in the Middle East. I think we know Syria doesn't produce oil, and that contagion effect that we felt, if in fact we did get an issue there, I think was sorely felt in the price of oil. But for where it is now, I think a deal will be done. As a result of that, I think oil will probably come under pressure. We've already seen a little bit of it this morning. I actually feel that it'll trade significantly lower. And I think one of the other reasons it should trade lower is on the back of that find in the Gulf from Texaco just over the weekend, which could see the region produce close to 2 million barrels of oil 2 million barrels of oil per day by 2020. So when you look at it, the crisis in Syria plus some of these new founds actually should find a little bit of pressure on the price of oil. So in my mind, we should see it close to that US $100 in the next couple of months. Well, I think when you look at natural gas, I guess we're coming into the winter period. We'll probably see a little bit more demand start to come. At the moment, we've really got to break through that 380. If we get a breakthrough that 380, then I suggest prices will start to trade higher. I guess natural gas, as we know, it is in conflict with a lot of the other energies. As a result of that, I sort of feel it's going to have a little bit of issue on the top side unless we get some quite adverse weather. So if anything here, 380 does represent resistance, and I don't see it trading through that level at the moment.